Well, hi everyone, and welcome to the Buffett and Beyond Saturday ETF report. And the question is the bull market back? And this is April 26, 2025. Remember, folks, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And let's get right into some charts. And these are the QQQs, or the NASDAQ 100. And we can see that bottom that was put in where that scared everybody. We had two gap down days in here and then in here, and on heavy volume. Then the market bounced up, came back down a little bit, and every technician out there wanted to see this market go down and test this bottom here. But instead, it turned around and went back up as the news on China and the tariffs started becoming old hat. And when the president came along and said he was not even thinking about firing the Fed chair, who is Jay Powell. So that relieved the market a lot because they want to see independence between the Fed and the federal government. And so that's the way it's going to stay, folks. That made everybody happy. And we are sitting, as I'm recording this on Friday afternoon, we are sitting at a positive here, right up against this line right in here, but we're heading toward the 50-day moving average, and you can see the screen line here starting to turn up, and we're going to see a lot of charts that are doing that. Now when we come all the way down here, we see this intermediate term indicator that we use, and it has turned up, and you can see where the bottom was all in here, and then it went back up, crossed over to the upside. This was actually a buy signal in here, came back down, scared everybody, but right to that line, and then took off again. So we had a very good week this past week, and boy, oh boy, everybody's a bit relieved. And when we look at the SPY, which is, now remember the SPY is 1/10 of the S&P 500, charts exactly like it because the SPY is the S&P 100 stocks, and we can see the same type of thing. We went up, we crossed over this green line in here, which is the 20-day moving average, and on Thursday it actually went down and fell below it just to test it, and then closed up near the top right in here. And today, as I'm recording this, it's down just 2 points, and that's fine because this indicator down here is pointing up, just like we saw in the last chart. Now let's go to utilities, and how are they doing as a defensive stock? And this is or defensive group. This is what I wanted to show you in here, and which we showed last week or the week before, that when the market really start falling apart, the utility stocks go down with it. So everybody says that utilities are defensive stocks. Well, they are to an extent, less volatile than the market, but when the market sells off and everybody's selling, the utility stocks will sell off just as much as the rest of the market. But it is coming back very nicely in here. And right now on Friday, as I'm recording this, it's down just a tad. But down here, we're starting to cross over this main line in here, because all these lines you see, this is called a histogram. And the histogram tells us when there's a crossover. And as this started to turn up, it tells us in advance if there's going to be a turn or not. So we're looking at this turn in here. Is this histogram going to go higher, or is it going to turn around and go down a little bit? So you can see the utilities. Now the utilities are above the 200-day moving average, above the 20-day moving average, above the 50-day moving average. So you could see what we're doing right in here. We're coming down to test this moving average right in here. So let it test away, folks, because it looks pretty good out there. And let us look at the portfolio. Now, 2 weeks ago, when we reported this, the QQQs were down 13%. Now they're down 8.5%. Again, the QQQs is the NASDAQ 100. Follows the NASDAQ pretty closely. The S&P 500 went from down 11% to down 6.7%. So in other words, it increased by about 4.3% over 2 weeks ago. This is the all-star portfolio of ETFs. In other words, we take the ETFs that have outperformed the S&P over the past 5 years, and then we take the top stocks from those ETFs. So you can see over in here in our industries, we have internet, we have telecom equipment, semiconductor, cybersecurity in here, information services, computer software, cybersecurity. So yeah, we have a host of stocks in here which are from different ETFs, and it seems to be working very, very well. And this is the second year that we had the all-star portfolio. Well, this is going on the third year. And the all-star portfolio in 2023 was up 97%. But it was down in 2022. Remember, the market was down in 2022. The S&P was down about 19.6%, and the QQQs were down 34%. And this portfolio was down about 34% also. But then in 2023, it came roaring back. The QQQs were up 53%, and this portfolio was up 97.9%. Last year, the QQQs in 2024 were up 24%. This portfolio was up 36%. And this year, it was down 12.8% a couple of weeks ago. Now it's only down 5.9%. It's doing better than the S&P 500 and doing better than the NASDAQ 100. So yeah, this portfolio has been very, very nice to us, and we kind of like the All-Stars model portfolio. And as we go over the 5-year returns, which we've gone over a couple of times, the QQQs over the past 5 years, not counting this present year, QQQs are up 141%, but our sector all-stars that we just looked at, up 422%. So when you look at an index and everybody says, well, I want to be in the QQQ ETF. Well, if you pick the best stocks out of that QQQs, then you could be up almost four times as much as the index itself. I'll call it 3.5 times more than the index itself, just by picking out the best stocks. And that's what we do here. We know how to pick out the best stocks. Now, the S&P 500 over the past 5 years, up 82%, but our growth portfolio of 30 stocks, which is our favorite portfolio, we have a 22-year history on this portfolio, but over the past 5 years has doubled the S&P 500 index, or just about doubled the S&P 500 index. So even out of the S&P 500 index, folks, you could buy the ETF, or you could pick the top 30 stocks in that ETF portfolio and double over the past 5 years. Over the past 22 years, this 30-stock portfolio has outperformed the S&P 500 2.5 times to 1. So that's better than most portfolio managers, because remember, over any 10-year rolling period, 96% of professional money managers who manage the publicly traded mutual funds cannot outperform the S&P 500. So the clean surplus methodology that we use has proven very, very well, whether you're in the tech and semiconductor stocks and a few other industries that are in the NASDAQ. You could be up almost 4 times that, or 3.5 times that of the index itself. So in other words, every index is comprised of above average stocks and below average stocks in that index. And what we do is we pick the above average stocks and try to stay away from the below average stocks. Let somebody else buy the below average stocks. We want the above average stocks. And let's look at portfolio protection. So this is portfolio protection about 12 to 15% below the market averages. And right now we went down. We were actually around 500 on the SPYs, which was 5,200 on the S&P 500. And these puts were all in the money. And as the market went down, our portfolios that are protected with this portfolio protection would not have gone down anymore. So our 30-stock portfolio was down about 6.8%, and if you had this protection at any at any point during the past decline, you would have only been down a couple of percent for the year. It's nothing that you could even notice. So that's why we have this protection in all the time. And then we'll sell some covered calls on some of our stocks in order to get the money to pay for these puts. So this is doing very, very well. Right now, as I'm recording this, the SPY is at 547, so we're well above the 520 level, but that's where our protection sits right now. And let's look at the oil and gas, because the oil and gas just had a big, big tumble because everybody thought we were going into recession. In fact, one of the major brokerage houses, their research department called for a recession until the differences between the president of the U.S. and the Fed chair just kind of subsided, because President Trump said he has no intentions of firing the Fed chief. And so that made everybody happy, and that's when the market kind of bottomed and then started this rally up, and we'll see how it goes. Because now they're saying, okay, if there's no recession, that means the price of oil and gas will probably go up a bit. And until more production comes online in the United States, might take a year or two, and then oil and gas prices will probably go down from there. But right now, we're on a little rally in here. And this indicator down here, intermediate term indicator, has turned up. Gold, yeah, gold was on a streak, wasn't it? Look at this rally in here. And then all of a sudden it went to the top. And then we had what is called an outside day, where the market goes up above the day before and goes down below the day before and closes down. And that's what it did in here. So, and some technicians call this an island reversal, where you have these gaps in here, and you had the big gap up and then you had the gap down. So they call that an island reversal, which is not a good thing if you're long gold. So maybe with this indicator turning down, we're about to get a sell signal in here. And then gold will do some of the retreating, because some of the uncertainty is coming out of the market. So people are not going or flying into gold anymore. The flight to gold, flight to safety, yeah, they're starting to come out of that and buy stocks with it. That's why the stock market's going up. Transportation, yeah, the transportation kind of leads the Dow Jones, and that's what people look at, or what technicians look at. They look at the transportation index, and that for the market to have any kind of good recovery, you have to see the transportation stocks go up. What's transportation all about? Well, it's carrying raw materials to the producers. The producers are sending the finished product to the retailers, and the retailers are selling it to people. So as selling orders or buying orders come in for products, then you'll see the transportation starting to take off, because more trucks, more ships, more planes have to be used to transport not only raw materials but the finished products themselves, and then they have to be delivered to our front door. It used to be we used to go to the mall and get those things, and now we don't. We go to the front door, and there it is. And, of course, we have the same buy signal down here in the intermediate term. Technology, we haven't looked at the XLK in a long time. Same thing. Same thing. We're above that 20-day moving average, and it tested it on Thursday, and right now it's still climbing to the upside, but it's Friday. And folks, a lot of people are saying, hey, I've had enough of this week, and those guys on Wall Street and gals on Wall Street are going to go home early today. So we don't expect much of a move today. But if the market closes up, and we think it will, then that bodes more confidence in the market, because if you go into the weekend, then and people are long stocks. In other words, they're not selling just before the weekend, they're buying before the weekend, which they've done all week long, then that means they have more confidence that nothing really wrong is going to go wrong with the economy over the next 2 days. So, folks, here we are. We had a tumultuous week this week. Yeah, it's time for a rest. Don't think about the market. Be with your family. Be with your loved ones. You stay safe. Go out for a walk. And, folks, guess what? We'll be right back here in a couple of days. Have a great weekend.